back on Morning Trade Live. This week's deluge of retail earnings will continue tomorrow morning, with Walmart set to report its quarterly results. The report will be the first following the announcement that current CEO Doug McMillon will be stepping down this upcoming February. So here's a look at the chart. Shares of Walmart are up at 20% year over year. And let's check in on the price action of some of the other major players in the sectors as well today, because we have already heard from a couple of names like Target, down around 0.5% for that name. But we do have Walmart shares down around 1% ahead of this key report. Costco down 1.5%, and Amazon down just 1% right now. So we are seeing some negative sentiment across this space right now, perhaps off the back of some of the warnings and certainly challenging environment that some of the retailers have already been highlighting in some of their earnings reports. Key from Home Depot, Lowe's, and as I mentioned, Target as well, about the state of the consumer at the moment. So maybe a few concerns weighing on the space, but that is the focus of the morning trade. Joining us now for a closer look is Marley Kayden, my co-host on Market on Close. So Marley, what should we know ahead of this report tomorrow?
There's some pretty good expectations for Walmart coming into this report. And like you said, we are seeing some pressure in these consumer stocks, these retail stocks today, because of some of the numbers that we've gotten from Home Depot, from Lowe's, from Target. But Walmart's sort of in a separate camp from them, because Target is reporting some choppy spending, consumers and shoppers looking for value. And that's sort of where Walmart shines. So it may not apply to Walmart. As far as what the street is looking for, they're looking for EPS of about 61 cents on revenue of just over $177 billion. Operating income expected to come in around $7.1 billion. That would be growth on the top and bottom line that's consistent with the year over year quarter. Now, I saw a really interesting thing. If the sell side consensus estimates for Walmart's revenue comes in, it would be the first time ever that Walmart would print its first trailing 12-month revenue in excess of $700 billion. So it would be a record-breaking quarter. More importantly, or I guess more impactful than that when you think about it from a perspective sense, is the U.S. economy is $33 trillion in size. Walmart's revenue would then make up more than 2% of the entire U.S. GDP, if you want to put some context and perspective on just how big that number is. As far as their average ticket, that's an important number, one that Home Depot missed on. It's increased the last quarters by about 1.5% on average. So their ticket price, though, over the last 12 quarters was up more than 2%. So we have started to see that shrink a little bit, as we know that shoppers aren't spending as much and they're not buying as much because things are costing a bit more. And we have seen that across the board. So that number will definitely be in focus. Also saw some notes about whether or not we'll see any impact from the SNAP benefit issues that we saw during the shutdown here. So that remains to be seen also. Walmart gets about 60% of its sales, though, from essentials like groceries. So that is another distinguisher from them versus a Target when you're trying to look at them. It does put them in a really good position, especially with what we know about consumer behavior right now, to capture that spending as it has been shifting from discretionary to non-discretionary purchases in this weaker K-shaped economy. Also seeing data that says their third quarter foot traffic should be up. So we'll see if that translates to an uptick in same-store sales growth. That's expected to be north of 3%, Sam. So Walmart should be a really good look sort of at more broadly how the consumer is spending, because groceries is such a big part of their business.
Oh, absolutely. And as we've been mentioning as well, I mean, it's the end of an era with that CEO moving on. And so no doubt there'll be some degree of nostalgia on that phone call as well. So we'll wait to see what they have to say. Thank you so much for getting us across the expectations for that today, Marley. I'll check in with you later. Let's trade Walmart now with Scott Bauer, CEO of Prosper Trading Academy. How are you approaching your example trade for this name?
You know, it's interesting. I think it's going to be really difficult to take what Target said and bring that to Walmart, because even though Target was very bearish about holiday sales, this could actually be a very big boost to Walmart. So I'm not super bullish on any retailer at this point, but I always go to best in class. Best in class in this sector: Walmart, Costco, maybe even a TJX. So with earnings tomorrow morning, I'm actually going to buy a pretty bullish calendar call spread. So what does that mean? I am going to sell next week's 105 call, which is about $4 ahead of where the stock is right now. And I'm going to go out about a month or so to the end of the year, December 26th, and buy that same 105 strike call. I can do that pretty inexpensively, somewhere around 90 cents or so. What I really want to see happen here is Walmart just kind of grind higher, maybe into the start of Black Friday, into the start of the holiday season here. And as we approach that 105 level, I've got this time period to work on this position. So I can do that best case scenario, 105 at the next week's expiration. So I am moderately bullish on this call.
Moderately bullish. Okay, we're going to be watching out for this report card for Walmart. And as you say, I mean, given some of the clues we've been getting from some of the other retailers, I mean, the setup does look a little bit concerning here as far as the trends. But let's see if it lives up to some of these expectations. Just want to get your sort of overall thoughts on the market today, Scott. Just given, of course, we are seeing some degree of stabilization after the risk off we've seen in recent sessions. Looks like the S&P is trying to break that 4-day losing streak ahead of Nvidia. What are you seeing out there?
Yeah, there's still some caution out there. I kind of wish that we hadn't had this strong move this morning. I don't know if that's going to be a setup for a disappointment with NVIDIA or not. But, we're looking at rates, really. If we look beyond NVIDIA, and it's hard to look beyond NVIDIA because that is such an important metric for the overall market. But I think underlying that is really what the Fed is going to do. I think NVIDIA, the movement in the stock is probably going to be very small, as opposed to what the market is pricing in, which is about an 8% move. But obviously, we can get a big move in the market. So I think there's still a lot of caution out there. But one thing I really look to is the VIX. And even with yesterday, yes, the VIX was higher. It never really got above the 24, 25 level or so. So I think there's definitely needed caution out there, but it's not anything that is, very overwhelming at this point.
Okay, and then obviously the next catalyst is going to be some of the jobs numbers and then what the Fed is going to do come next. But as you say, hard to look beyond NVIDIA right now. Scott Bauer, thank you so much. Always appreciate your time and your insights. CEO, Prosper Trading Academy, appreciate your time coming.